FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is March 7th, 2017. As we get closer and closer to the Ides of March, whatever that means, wasn't a good day for Caesar. Perhaps the market will continue on, but obviously there could be a market crash at any given time, which is why we've got David Scranton on with us now. David, you are CEO and founder of Sound Income Strategies, and you're also author of new book, Return on Principle, 7 Core Values to Help Protect Your Money in Good Times and Bad. And we welcome you back to the show.
Well, thanks for having me back. I really appreciate that. And yeah, if what you said is correct, then we could be going from the good times to the bad. You never know.
Yeah, well, look, I mean, this so-called recovery, well, it's certainly a stock market recovery. Whether it's an economic recovery or not, we could debate that for a long time, certainly in terms of workforce participation, in terms of number of people collecting food stamps, in terms of so many other numbers out there. Main Street's really been left by the wayside, if you will. Hasn't been a recovery. But, as Wall Street continues to become disconnected from the so-called real economy, you could argue that the stock market gets more and more dangerous by the day.
Of course. And if you think about it, the stock market has been disconnected from the real economy for a long time, probably since the 1980s. Tax Reform Act of 1986 had a lot to do with it because all of a sudden they had done away with, and I know it's back now, but still for many, many years they had done away with the preferential capital gains treatment. So what happened is that as opposed to people buying pieces of companies in America for the long term because they thought the companies were solid, everyone became more of a speculator. And even if you're a mutual fund investor, well, guess what? Your mutual fund manager has become that speculator on your behalf. So it's been a trend going for a long time, but when it really comes to fruition is when the market's at record highs as it is right now, and that's when people really get concerned about that disconnect between the economy and the markets.
Yeah. And so Wall Street loves it. Main Street could care less. 54% of people aren't even investing in stocks. And when they start investing in the latter stages of a stock market advance, a bull market, that's when you have to get a little bit worried there, don't you?
That's right. In fact, one of the things about this rally that we've seen is we saw the government bond prices took a drop. It happened pretty precipitously, which means, the interest rates, the yields went up on longer-term government debt, happened precipitously right around the election. But then as the stock market continued to climb, the government bond prices didn't drop anymore. Now, why is that a big deal? Because if it's really what's called a risk-on trade, where all of a sudden investors are thinking, I feel comfortable, I want to be in the market, then they're usually selling things like government securities and buying stocks. So that government security should drop in price, the yield should continue to go up. And that hasn't happened over the last 3 months or so, which tells me that, yeah, people are driving the car with one foot on the accelerator, but they have one foot on the brake too. People are still being very, very cautious about what's going on in the markets.
Yeah, so nobody quite buys into it, but that goes back to the old cliche, stocks climb on a wall of worry.
Well said, yes.
So nobody ever buys into a stock market, a bull market. Nobody ever believes it, right? Isn't that true? Yeah. Nobody ever quite buys into it, and that's historically the way it's always worked.
Yeah, and what happens is the people expect the peak to come before it actually comes. And then on the downside, the same thing happens. People think they've hit bottom and it inevitably goes further. So markets tend to go in either direction further than your average investor thinks. And that's what requires a lot of patience. And I can't say that I'm much different from that. I know in 2009, I had some people getting back in the stock market a little bit before we hit bottom necessarily. And, I've had people out now for a while thinking that we were topped out. We weren't going to go much higher. I don't think anybody really expected Donald Trump to win the election. So when he did, and we got that Trump bump as the media has now come to know it, that was a surprise. So again, even as an advisor, I find that a lot of times you're expecting the peak not to go on as long and the trough not to go on as long either.
Yeah, well, I will correct you. I expected Trump to win, so I was one of the few. But
gee,
yeah,
wow, that's impressive. I didn't see that one coming, I have to tell you.
yeah, totally knew it was going to happen. A couple of moments of uncertainty, but no, I knew it was going to happen because of what I call the Brexit states in the Midwest, upper Midwest there, Michigan, Wisconsin, Iowa, and Ohio, knew it was going to happen.
Yeah.
That's why Reince Priebus is where he is today. But in any event, that's old news already. But so Trump, 1 minute the stock market's plunging election night when he's elected, and the next minute it's going on this tremendous ride here, David. I mean, does that sound rational to you?
No, you hit the nail on the head. The fact that it dropped and then came back isn't rational, except I think what happened was a lot of the Clinton supporters were probably the ones to dump right away, thinking, oh, this is a problem, let me dump, let me get out, some big investors. And then ultimately, when everything settled and he gave his acceptance speech and everything, people probably thought, okay, well, this can't be too bad. His policies are pro-business, so that's good for the market. So we're going to ride it upward. And I had I'm trying to remember who said this on my television show. I want to say it was probably John Nigerian. I asked him, I said, 51% of the people voted for Hillary Clinton, and that, in my opinion, my observation as an advisor, those tend to be some of the more affluent people. So that 51% might control 60 or 70% of the country's wealth. What happens when they get nervous in the first 100 days about some of the things that President Trump's doing, and they pull out of the market? And John's answer was really simple. He said, well, you know what? He says Democrats are capitalists also. And those simple words, I think, are what's really helped the market to come up since the election night.
Mm-hmm. And if you look at a lot of things, coal countries coming back, a lot of these policies that he's doing, there were things that Obama injured the economy with through executive orders. So he can undo the damage just with an executive order.
That's right.
So,
and that's his style. As we all know, that's his style. He'd rather not have to run things through Congress. If not necessary, he'd rather do the executive order. And that's, I guess that's going to be his toughest challenge ahead, is realizing that, this isn't like his company where he's at the top, he can make a decision, and everybody lines up behind him. That's going to be his biggest challenge is, getting people to line up behind him. And hopefully he'll be able to pull it off.
Well, he is the quintessential deal maker, right?
That's correct. That's right. The art of the deal.
So he's going to have to adjust his style somewhat to, work within the confines of Congress. But, this is what he wrote the book on, I guess. Hey, we'll see. It's a lot different running a business than running a country.
That's right. That's right. It'll be interesting to see what happens also with the Federal Reserve with interest rates along the way. Janet Yellen, as you know, went ahead and raised rates a quarter point just a couple months back, and there's some serious talk about whether that's going to happen again in the month of March. And normally I don't think she would do it, but we also know that Janet Yellen comes from a very liberal background herself. I want to say University of California at Berkeley or something. And, there's a lot of people who speculated that she's going to raise rates just because it's kind of a way to stick it to President Trump, push the rates up and, some modicum of control that would be maintained. But we'll find that out just another week or so.
Yeah, well, we're going to find out real soon. But, on the other hand, she would like to get reappointed. And if she's uncooperative, that probably won't happen, will it?
Exactly. And, of course, she might be thinking it's not going to happen anyway, so you never know.
Mm-hmm. You never know. But stranger things have happened. It's a strange thing the way the Fed works. Some of these guys have gotten reappointed and you'd never expect it, and others don't. But generally, they do get reappointed.
Yes.
It's all about they adjust when a new team gets in and they cooperate fully. We've seen it over and over again in the past, haven't we? The only one that I saw really get kicked out was Volcker because Wall Street didn't like him because he actually contracted the money supply or slowed down the growth and really brought inflation under control. And he became a, really unfavorite of Wall Street while he did all that.
Yes.
But the others...
It'll be interesting what happens, but the concern that I've always had is, that when we get this thing called the flat yield curve, when short-term and long-term interest rates get too close, that it's not good for the economy. Banks don't like to lend, generally speaking, in that type of environment. And fortunately, long-term rates, as I said, did bump up a bit. Long-term rates went up about 50%, 50, on a 10-year Treasury, for example, between really shortly after the election. And, that's, people think, 50% increase. They don't realize it because it went from 1.6 to 2.4% on the 10-year government bond. But that's a 50% increase. And I'm not even sure if in the 1970s or 1980, if we ever had a 50% increase in interest rates in that short a period. That is a saving grace. What that does, though, is that does allow her a little, because we've had a bump on the long-term side, but not a lot. I know they want to target 2%, and they're not going to be able to get short-term rates up to 2% if the 10-year Treasury is still at 2.5%. That's going to have to come up higher. And as you know, that's not set by the government. That's manipulated by the markets, and that will only be able to edge itself higher if, indeed, his pro-business, President Trump's pro-business philosophies and strategies actually start to get enacted and work.
Yeah. Well, to some extent, I think they might be working. What do you think, David, of all of these jobs that he's been announcing right and left here? Are they real or are they imaginary?
Real. But I also think, he's the ultimate promoter. I mean, you do have to remember this is the first time we've ever had a president of the United States who, not the first time that we've had a president who's a television star, but that's in essence a reality TV star. So by definition, he's a great promoter. And good politicians know, even career politicians know, you start running for election as soon as you get elected. And so, he's making a big deal. When he gets a few hundred jobs here, a few hundred jobs there, he's making a huge deal about it because it's, he's trying to keep his following and keep his support. He's worried that if in some parts of the country, some of his people in Congress that are with him, if their constituents end up all of a sudden not liking things that are happening, then he may start to lose some votes in Congress. So, he's always promoting, and, hopefully that will help him get some of these pro-business strategies implemented. Yeah.
All right. So, David, it's been great speaking with you. Just tell us your book again, the name and where we find it.
Sure. Return on Principle, and principle ends in PLE. 7 core values to help protect your money in good times and bad. And you can find it right on Amazon, or you can go to our website, returnonprinciple.com. And I wrote the book because of what you said. It was, there's a dichotomy right now between Wall Street and the real economy, and your average investor doesn't realize that. So the book is written to have people be able to take a common sense approach on the markets and to learn to develop their own gut instincts when it comes to investing so that they can become better. And, the timing is perfect for it because we became an Amazon bestseller as soon as it came out, and we've held the top 100 list and 100 list in 2 separate Amazon categories ever since. So I guess it's a little bit of being fortunate, right place at the right time for us.
Yeah, that's for sure. All right. Hey, and if you got any questions, comments on this interview or others, just simply send us an email, kl@kerrylutz.com. That's kl@kerrylutz.com. Twitter feed is @KerryLutz. Facebook page is Financial Survival Network. Hey, David, good luck on the book, and we will talk to you again real soon. Thanks so much.
It's been a pleasure, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Sound Income Strategies, and you're also author of new book, Return on Principle, 7 core values to help protect your money in good times and bad. And we welcome you back to the show.
Well, thanks for having me back. I really appreciate that. And what you said is correct. And we could be going from the good times to the bad. You never know.
Yeah. Well, look, I mean, this so-called recovery, certainly is March 7th, 2017, as we get closer and closer to the Ides of March, whatever that means. Wasn't a good day for Caesar. perhaps the market will continue on. But obviously, there could be a market crash at any given time, which is why we've got David Scranton on with us now. David, you are CEO and founder of Stock Market Recovery. Whether it's an economic recovery or not, we could debate that for a long time, certainly in terms of workforce participation, in terms of number of people collecting food stamps, in terms of so many other numbers out there. Main Street's really been left by the wayside, if you will. Hasn't been a recovery. But, as Wall Street continues to be
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today, become disconnected from the so-called real economy. You could argue that the stock market gets more and more dangerous by the day.
Of course. And if you think about it, the stock market has been disconnected from the real economy for a long time, probably since the 1980s. Tax Reform Act of 1986 had a lot to do with it because all of a sudden they had done away with, and I know it's